Hello everybody, it's Crypto Caesar Capital. Hope you are well. It's the 21st of October 2023, and today we're going to look at the markets in general. So first thing we're going to do is we're going to look at Bitcoin on the shorter term, and then we'll look at Bitcoin longer term, and then we'll look at the altcoin market, what's happening there, and consider some points around Bitcoin dominance, etc. Okay, so let's get on with it. So this is Bitcoin on the 3-day, so slightly shorter term time frame. And you can see here that Bitcoin has ground out an inverse head and shoulders. Now, a head and shoulders pattern is in fact a bearish pattern, okay? But an inverse head and shoulders is, of course, the opposite to that and is a bullish pattern. And we can see here that we have a clear inverse head and shoulders. You see the left shoulder here. We've got the head, okay, which was the bottom in November 2022, and then we've got this right shoulder, which was created in March 2023. So the technical target for an inverse head and shoulders is to be measured from the neckline to the head, and that's what we have done here, and therefore the technical target is pretty much bang on the 618 Fibonacci, which is 40K. So this is really still a legitimate target for the bulls, okay? But the only concern really we have is that this area here, which I'm calling the frontline resistance, has been holding as resistance for a significant period of time, okay? So we've got, it's about 7.5, 8 months worth of both support down here in the sort of 24, 25K area, but also resistance up in this 30K area, okay? Both significant areas. So Bitcoin's stuck in a range, okay? It's done well to hold this sort of 7-month support at 24.5, 25K. So that's solid, that's bullish. That shows that it's got a solid structure and it's holding that as support. But also conversely, this area of 30, 31K has been an extremely difficult zone for Bitcoin to break. So this area of resistance really has got to be broken before anyone can start, getting excited. So for me, we've got to break this sort of 31.5K. If we could break this area of 31.5K and close a decent higher time frame candle above it, so at least a 3-day candle, then I think we're going to have a really good go at going for that technical target of the 618, or the technical target of the inverse head and shoulders, which is the 618, which is about 40K. But until we can break above 31.5K, then, we're just stuck in this range. And if we're stuck in a range, we're stuck in a range, okay? It's not a big deal. All I want to see is this area of 25 or 24.6 held, okay? And we've just been bouncing up and down in this range for a long time now, but it's only a matter of time before we break out. And to be honest, we are getting closer and closer to the Bitcoin halving. We are getting closer and closer to the approval of a Bitcoin ETF. So I think the narrative of up, or at least remaining in this range, is better than breaking this range, okay, and breaking down below 25K and coming all the way back down to the bottom of the range, or at least testing the 21K area, 20K area, etc. So I think the narrative of up is stronger than the narrative of down, if that makes sense. But really, it's just a question of waiting and seeing what happens. Sorry, excuse me. But really, for me, it's about breaking this area of 31.6 or so, 31.5, on a higher time frame basis, so at least a 3-day candle. Once we get that, then I think that's the green light to 40K. I mean, that is the technical target at the moment, and that will be what the bulls are looking for. Now, once we get to 40K, we might have a decent pullback back down to this area. And the reason why I say that is because this area of 30K or 31K has acted as resistance, right, for 7 months. Okay, that's a significant period of time. What the market should do from a technical point of view is reach its target, but then come back down to test this significant area of 7 months, what was then 7 months of resistance, to now support. Okay, so it can say to itself, okay, we've hit that technical target, but now we've got this area of support and we can start our engines again for another move to the upside. That would be the perfect scenario, really. So hitting the target of 40K. Okay, so I'm clear, then coming back down to test this area of what once was resistance as support. All right, so that's Bitcoin on the lower-ish time frames. Let's look at let's look at Bitcoin in the longer term rather than the shorter term. So this is the BLX chart, and this is what I call the Bitcoin rhythm. It's quite clear if we look at this chart that we have a rhythm going on here. Okay, we have a 1-year bear market and then a 3-year bull market, and you can see that labeled out or boxed out in the charts or in the chart in front of you. The red box indicates the bear market, which is a year long, and the green box, of course, indicates the bull market. And it's quite clear that Bitcoin has a rhythm here of 1-year bear market, 3-year bull market. And that's why I firmly believe that the bottom is in, because Bitcoin works in cycles, and there is a clear 4-year cycle within Bitcoin. Now, a lot of people incorrectly refer to the 4-year cycle as the halving cycle, or call the halving cycle the 4-year cycle. That's in fact incorrect, because the Bitcoin halving cycle works on blocks mined, not time, whereas the 4-year cycle is actually a measurement from peak to peak and bottom to bottom. Anyway, I've done lots of videos on that, so you can go back and look at those if you want. But essentially, this is the Bitcoin rhythm: 1-year bear market, 3-year bull market. So far, so good. This hasn't been broken, but of course, it will be broken in time. However, we are in the first part of the bull market, which could be a little bit boring, etc. But we are certainly moving towards the halving, and in my view, the bottom's in, and we are at the first part of this bull market. And of course, the halving will be coming first 2 weeks of April. So we are moving much closer towards that. But this gives us a general view of what's going on here. You know, we're in a bull market. It doesn't seem like it at the moment because everybody's fighting, everyone's swearing at each other, everybody's trolling each other and, you know, getting annoyed. But we are technically actually in a bull market. The reason why is because we are printing higher lows out of a bottom. Simple. Okay, so let's look at altcoins. Before we look at that chart, let's have a look at Bitcoin dominance. Now, this is something that a lot of people, for whatever reason, I don't quite understand, don't understand. I don't understand why they don't understand it, because this is really quite a simple chart to understand, and even influencers with big followings still don't get it. And I you know, either they're retards or they haven't been here for very long, because they don't understand this. And to understand the altcoin cycle properly, you need to understand Bitcoin dominance. Okay, now what's clear about Bitcoin dominance, and I've done lots of videos about this in the past, and you can go back and look at these if you so wish. They're in the playlist. But what's clear about Bitcoin dominance is it needs to be super high before alts really start to catch up or outperform Bitcoin. Okay, so let's look back in history very quickly, briefly. You can see the beginning of the alt season back in 2017. Okay, what Bitcoin dominance was 97%. Okay. And then the alt season began. Alts started to catch up with Bitcoin, then alts started to outperform Bitcoin, and then alts just went parabolic, okay? And when all was said and done, at the euphoric top in January of 2018, the first week or so of January 2018, the dominance of Bitcoin was 36%. So it went from 97%, okay, or 97, 98% to 36.93%, okay? That was the peak of the altcoin cycle. That was the peak of the altcoin cycle. And it started 97%, peaked out 36%. Then what happened? Everything lost its value. Lots of altcoins went to zero, and Bitcoin exhumed its dominance over the market. And the next point, really, of which the altcoins started to catch up with Bitcoin or outperform Bitcoin, or at least the beginning of the alt season, Bitcoin dominance was about 71.26%. Okay, it dropped down, and then by the time we got to about sort of, March 2021, then alts were just ripping and Bitcoin dominance was dropping out the sky. And then arguably really the top for most altcoins, although we did have another top peak for Bitcoin and some of the bigger altcoins, but the top for most altcoins in 2021 was around about the April, May point. And Bitcoin dominance was at 39%. Bitcoin finally found its top, and altcoin dominance, Bitcoin dominance was then 39% at that point. So the point is this: alts found their top when Bitcoin dominance was really, really low. Okay, and alts begin to rip when Bitcoin dominance is really, really high. And for some reason or another, I don't understand. You got some influencers with massive accounts, bigger than mine, have been saying for months now, almost a year, an alt season is around the corner. And looking at this chart, it's obvious, it's obvious to anyone that there was not an alt season around the corner, because Bitcoin needed to regain its dominance over the market before alts really will. And when I say alts, I don't mean one alt that's a bit lucky. There are going to be some exceptions, but generally speaking, alts in general will start to either perform as well or outperform Bitcoin. Bitcoin dominance needs to be higher than this. And it's on its way up. It's at 52.55% now. And my view, and I've said this for about a year now, even longer maybe, is that Bitcoin dominance needs to be around about the 58% mark, thereabouts, give or take a couple of percent either way, maybe 60%, maybe 56, 57, who knows, but around about that 58% mark before I think that we see a topping out in Bitcoin dominance. Once we see that topping out, which I think is going to be this area of support back in May 19 and September 20 of 58%, once it tops out around here at 58%, that's when you're going to start seeing the altcoins move a little bit better versus Bitcoin. For example, on their Satoshi pairs, so their Bitcoin pairs, they will start moving upwards at that point. And all these laser-eyed twits on Twitter at the moment, posting Ethereum Bitcoin charts, it means nothing. This is what happens at this part of the cycle. Alt BTC pairs get drained. Why do they get drained? Because Bitcoin dominance is going up. I mean, how can these idiots not understand that? I'm sorry about this. I feel passionate about it. And it's just such a basic thing for somebody to understand. And they just don't get it, do they? Because they're twits, it would seem. Anyway, so my view is this in a nutshell: Bitcoin dominance needs to get up to about the 58% mark. And then we will see some, movement in alts. So some decent movement. So alts will start moving with Bitcoin, maybe outperforming Bitcoin a little, but then as it starts to move down slowly, then alts will really start to rip, probably when it loses this 53% mark and drops down. That's when the alts really, really will begin to rip. But until then, we've got to get to about 58, 60% or so, and that's going to take time. And I think, realistically speaking, that might not happen, or we might not get to 58% until around about the halving, just before the halving, I would say. So around about beginning the first financial quarter of 2024 is when I think Bitcoin dominance will top out, around about the halving time, either just before it or just after it. That when we get to this 58% mark, 60% mark, that will be the signal really to, okay, alts are ready to start moving now, probably, because I can't see it going any higher. It's not going to, I mean, if you look back in time, what's happening is that there is a diminishing position or diminishing return in relation to percentage of dominance. So you've got 97% first alt season, highest was 71% in the last alt season. So it's obviously diminishing. So I think 60 or 58% this area of support here, which will become resistance, is a reasonable target for Bitcoin dominance to be topping out. So when it gets to that area, that's going to be a good signal to me, to my group, that, okay, alts are ready now. Alts are getting ready now. They're revving their engines. They're getting ready to move. Okay, so just keep an eye out for that. Okay, so let's have a look quickly at the altcoin market caps. I tend not to look at total 2 and total 3. Of course, total 2 is all assets except Bitcoin. Total 3 is all assets except Bitcoin and Ethereum. But the reason why I don't look at those two is because, unfortunately, so they take into account stable coins. And USDT is about 80 billion in market cap at the moment, so it can skew the vision really. So stable coins in the top 10 will skew the vision of the investor. This is why I like this chart. Now, others is on TradingView. It's simply called others. It's on TradingView, and what others looks at is the top 150 cryptocurrencies minus the top 10. So it doesn't look at the top 10 cryptos, so it wipes out those, and it wipes out, of course, stable coins that are in the top 10. And I think that that gives the market participant or the trader or the investor a better outlook or vision of where the market is, okay, at the moment. And this chart goes actually all the way back to 2014, and you can see that there's a clear rhythm in this chart. We've got these areas here, which I've boxed out in red, of accumulation zones. Okay, we have accumulation zones. Then when we get 6 months towards the halving, it starts creeping up towards the halving. Obviously, the halving is noted here in these yellow vertical lines. So you can see the second halving in July 2016. As soon as we got to that halving or close to it, the altcoin market broke out parabolically. It was the same in 2020. As soon as we got to the halving, broke out parabolically. And it's going to be similar, in my view, at the next halving. So I think that we've got to wait until just before the halving or on the halving or just after the halving before we get a breakout of the altcoins. But now, in my view, is an extremely good time to be looking to take position in altcoins, and that's what I've been doing. Essentially, what this chart suggests, if you look at the calculations there, you've got about 6 months maximum time prior to the halving to start taking position on alts. So that doesn't mean you've got 6 months. It means that the maximum time you've got is 6 months. It could be significantly shorter. Okay, if it wasn't for COVID back in 2020, it could have broken out around the sort of February, March time. You can see it broke out a couple of weeks before here, back in May 2016. So it kind of likes to break out either on or just before the Bitcoin halving. So you have a maximum amount of time now of just under 6 months to start taking position in alts. So we're already positioned well in Bitcoin and Ethereum. We're happy with that. So now we're just looking to take position in altcoins, and this is the prime opportunity to do it. So we are now taking those positions, and we understand that we have a maximum amount of time of 6 months. Could be shorter, but we now know we're under, we're under a countdown, right? So we are alive to that. So that's it, guys. That is the position at the moment, and that is the outlook, and I hope you enjoyed the video. Conclusion is basically this: Bitcoin in the short term looks pretty bullish, and we could get 40k. Bitcoin longer term continues in its 4-year cycle and rhythm, so nothing to worry about there. In relation to altcoins, Bitcoin needs to regain its dominance over the market, and in my view, I don't think we're going to get any massive movement with the altcoins until, Bitcoin gets to about 58% in dominance. It's quite clear here in this chart that you have a maximum time window of 6 months before you get a breakout. Okay, maximum time, not minimum. Okay, well, I hope you enjoyed the video. That's it for this week. If you want to join my group and have the opportunity to the 33-page research document we just completed with our best 10 altcoin picks for 2023, 24, 25, then that is included in the price for joining the group. If you want to join the group, I would suggest joining it pretty quickly, because we are going to increase the fee significantly very soon. So if you join now, you still get 12 months for $365, which is obviously an extremely cheap price for what you get. Okay, no worries. Have a good weekend, and I shall speak to you all soon. Thank you very much for listening. Take care.